Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, markets are in a holding pattern today. All eyes are on the US Federal Reserve. Not only does everyone expect a rate hike tomorrow, the talk was all of the dot plot guidance, and expectations are rising that it will show a regulator ready to hit the accelerator. The jobless rate is already below their target, and inflation signals are at levels they weren't expecting until the year end. Actually, this meeting will be a physical challenge for the participants because of a major snowstorm in the Washington area. Despite the certainty of a hike, the uncertainty of the extent of the guidance has markets on hold. And there will be the added uncertainty of what the Trump administration will do with a Fed that seeks to raise rates faster. The Fed's independence is in the balance. But the overnight signals were clear. American producer prices rose more than expected in February, the cost of services pushed higher, and the year-on-year gain was the largest in nearly 5 years, pointing to a steadily rising inflation pressure. In China, investment in real estate is growing at its fastest pace in 2 years, despite the official focus on restraining it. By any measure, the Chinese government is failing to control the people's impulse to buy property, no matter what it takes. In Australia, some banks are moving to raise deposit requirements even further for housing investor loans, on top of other recent moves like rate premiums. Restrictions on negative gearing are also announced, and most other banks look like they will follow these new moves. These shifts come as banks see renewed demand from this segment and are approaching their speed limits for investor lending set by APRA. And in South Australia, their state government has struck out on its own energy crisis solution path. It will spend $500 million to take control of the state's energy market, build and run a gas-fired power plant, and commission Australia's biggest battery as it struggles to secure stable energy supply to the state. But the federal government is not impressed with moves that lack coordination and it says will raise prices for consumers. A big mess got even messier. In New York, the US Treasury 10-year yield is slipping today, is now at 2.59%. Oil prices are down again today, and now just over $47.50 for the US benchmark, while the Brent benchmark is just over $50.50. And this is despite OPEC's supply restraint and a shift up in demand. Stocks are just too high, and there are rumours Saudi Arabia has started pumping again at pre-restraint levels. The gold price is slightly higher, up $2 to $1,205 an ounce, and the New Zealand dollar is also marginally firm at 69.3 US cents. On the cross rates, the Kiwi dollar is at 91.6 Aussie cents, and against the euro, 65.2 euro cents. The TWI is at 74.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.